Not for now.
No question. No questions.
Not for now.
Okay, then let's get right to it. So, today, presentation is lesson 12, and we learned a little bit in, I think, the second or the third week, lessons about candlestick patterns. Um, yeah, but we've not talked about chart patterns at all, even though they are very important in the forex market because the market is built around charts that are symbolic of what price action how price action reveals itself and what it wants to do. There are reasonings and secrets behind these charts and what they tell us and what decisions they can lead us to make. But at this time, we don't know more deep or much deep about these things, but we can utilize the little knowledge that we learn or we read about them and adjust them with the other strategies or concepts that we know and use them to trade. So, when we look at, um, so the first thing that I want us to know is that the whole of this 12 weeks lessons, um, we've been learning some basic things that can get us started or get us some wisdom or knowledge so that we will not be trading like we are gambling or we will not be doing just guesswork. At least we have something as a startup, some kind of knowledge to start with. So, what is the most basic for us to understand in order to be good, to have a good technical basis in Forex? So, from all the classes or the lessons that we've had so far, I've summarized all of them into these points on the screen. That if any of you or if you are able to learn some of these things or you are able to learn everything here, it will give you a basic starting point for you to be good or to be a good technical analyst in the forex. So number one is to know market structure, is to know, understand, be able to deduce, be able to um, look at the market and see the structure of the market. If the market is a bullish market, a bearish market, or consolidation, and the mini structures, the substructures, and the swing structures that are embedded in what you see on the market. So the information about the forex market or the asset, how the assets move, is a lot. There are a lot of complex and different things, different concepts coming together, or everybody has different opinions or perspectives about the forex analysis or technicals or something like that. And a lot of things also influences how a pair or market moves. But at the end of the day, in terms of price action, there is the basic way that a market will move in a bullish situation, in a bearish situation, or in a ranging state. And understanding market structure very, very, very well is going to help you in this. The second one is to be able to identify liquidity, know what is liquidity, be able to identify areas or zones where it's likely that liquidity is being built up and be able to know when a certain area or point or price action or price area is going to be induced or going to be used as liquidity so that price can move towards the intended direction that the market makers or the big boys wants to take it to. And when it's being targeted, where is it being targeted? Where is price targeting? Okay, after taking liquidity or after inducing a certain level of price, where is price going to now target to go? That is the next level or area where there is liquidity. So you should be able to train your eyes, your senses, so that you'll be able to understand when you see the chart, you will know that okay, if this area has been swept off and market has reversed, then it's going to this particular area. You should be able to understand all that. When I talk of knowing all that, you should be able to do that in multiple time frames, especially the higher time frame. So the third thing is support resistance. So support resistance is very, 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 very important. Okay, the areas of support that the market uses to move up and the areas of resistance that suppresses the market to drop or to crash or to sell. They are very, 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 very important, and we need to be able to understand and map them well so that we can trade around those zones. The other thing is candlestick patterns, which we've introduced ourselves to in the earlier lessons. And then the next thing is chart patterns. So chart patterns are very important. In fact, this week I watched one experienced trader giving telling about her strategy, and she mainly uses chart patterns, and I was very impressed by the way that the knowledge that he has about chart patterns and the way that she trades them. And I feel like they are very important. So they've been on the lesson that we will learn them and combine them with all the things that we are doing. But so let's see what we can do with them today. And then so far we've been learning some entry models, like how we will be able to frame the setup and then get our confluences and then take a trade. So what I have combined here is that for you to take a trade, you need an area or a price that you will buy or sell from, and you need where you'll be taking profit or you exit the market. So when do you buy or when do you sell? That is the entry model. There are things that you should look for, and when all those things are present, then that will help you to find confluence to buy. Some of those things, one, are chart patterns. So we're going to see which chart patterns are most probable or have the higher probability of playing out. And when you identify those chart patterns at certain areas of the chart or within such chart patterns, when you are looking at candlesticks for either reversals or confirmations, okay, within, let's say, for example, you have a chart pattern like a flag, okay, which is obvious on the chart. So you know that if the flag is a bullish flag, then you are guessing or anticipating a bullish continuation. So within that chart pattern, which is a flag, which is a bullish flag, and you anticipating a continuation, you will need to look for candlestick confirmations within that. Okay. And then you'd we've also introduced ourselves to the premium and discount zone on the Fibonacci. And we also have come up with a model where the premium or discount zone must have confluence with the support and resistance. For example, the 78.6% area should confluence with a main support resistance if you are expecting a reversal to happen or a continuation to happen, and price has given you an indication or a break of structure already. You are expecting price to move back into premium or discount, and have that area where you take your entry should have confluence with main support and resistance. So that is the second entry model. So we have first entry model where you look for chart patterns, look for continuation or confirmation candles within that chart pattern to trade. And the other model is where you can also use your premium discount, get your swing framing or swing structure, and then look for support resistance within premium discount, and then you can take your trade. So these are the things that if you would take a screenshot of it and probably note them down as things that you learned from the whole lesson, it will do all of us good. So basically, this is the whole class is about these things that I've summarized. And what we need to do is to keep practicing and learning them so that we can perfect them and build a good trading system with them. So what are some of the candlesticks patterns that we have? So I'm going to just mention them, but we'll go on the chart to look at them in real situations. Okay, so we have single candlestick patterns. For example, you can have a doji on its own. The hammer, the inverted hammer, the hanging man, the shooting star, Marabuzo, strong trend candle. It has a candle with no wicks. So sometimes you see a candle very big. It doesn't have a wick down, a wick up, and that candle prints and closes. Okay, that candle is a strong momentum candle. It's called Marabuzo. Okay, so it means that the trend is likely to continue very strongly. Um, yeah, the shooting star is a bearish reversal. The hanging man is a bearish reversal. The inverted hammer. So we will look at all of that on the chart today. And then we'll come up with about two or three of them that we can master, okay, and learn how to trade when we see them. Okay, you can know all of them, but you need to master one or two or three that you trust or you at least be using to trade. There are also double candles that or multiple two candles coming together to form a pattern, like the bullish engulfing, the bearish engulfing, the tweezer bottoms. Okay, we also have the tweezer tops, the PSN line, dark cloud cover, harami. So all of these are two candles that come together to form this pattern. But like I said, we would have to look at the most important ones to us. Or for me, it is the engulfing candlestick that I like the most. The bullish and bearish engulfing. I like that the most. I like to see that around where I want to take my trades. So we'll look at all of that on the chart as well. Um, so like I said, um, for me in particular, the ones that I like is the engulfing. I also like the doji. I like to see when I see the doji, I like it so much. And I like the hammer too and the pin bar. Those are the four candles that I have decided to be looking for in the market. So when I'm looking at a chart, I want to look for engulfing. I want to look for dojis. I want to look for hammer. I want to look for pin bars. Okay. What is a doji? Doji simply means indecision. Okay. Indecision. So indecision means that at the place where the doji prints and closes, there can be a reversal around that, or there can be a continuation. That's the meaning of indecision. Okay. So that area is very, 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 very important when you see a doji. Um, so these are some of the pictures of um, the single candlestick patterns. Um, if you don't know, any of them yet. So the doji is like the candle with just a small body in the middle, or sometimes no body in the middle. And it's like a cross, like a plus sign. So the long legged doji is um the second one. It has, you can see it very slim. Okay. It's like the wick up and the wick down are most equal. Okay. And we have the cross doji. Uh, that one, the area where the price opened and closed is up, is at the upside. Then hammer. So we all know hammer. Okay, the hammer that the carpenters use. So hammer, it has a body up. Okay, has a body up. Sometimes without a wick, sometimes with a small wick. Okay, but you can feel the body. And the inverted hammer, I think, is going to be the one with the body down. When you turn this one downside, that will be the inverted hammer. So these are all, I mean, these are most of the candlesticks that we can see on the chart. But like I said, we would have to be particular about certain, okay, yeah, so this is the inverted hammer. We have to be particular about certain um candles that we are looking for. Okay. So certain candles that we are looking for. Uh, let me see. Spinning top. Um, this is also spinning top. Bullish closing, bearish closing. Yeah. So all of these are types of candles. Okay. Does any of you have any candle that you really like so much? Um, Uchena, Precious, do you have a certain candle type that you really look for when you're trading?
I don't really say I would like any now, but I want to ask this pin bar, this hammer.
Mhm.
Hello, sir. Yeah, this pin bar. Sometimes I'm confused. If this hammer is like this in the midst of the chart, what does it show? Is it a uptrend or downtrend?
No, so the hammer itself is a reversal. Okay, so if the hammer is if it's happening, okay, so let's say market has been selling for some time, then you see a strong hammer candle print, or you see a doji candle, and after the doji candle print, the next candle that printed, price went up, body open strong from down, price went up and then shrinked, rejected, and came down and left the downside body. So that would be like inverted hammer. Okay, the hammer that is sitting down. So the doji plus the that hammer is going to be telling you a story after a long sell or after a sell. Okay, so the hammer is for reversal, and then when market has been buying, and then it also it goes up, and then you see that, oh, price goes up, price open down, then goes up and then reject with a wick coming, but did not take the low where the open of the price, so that it will give you a wick down. Okay, but it just closed a little close to where when it was where market price opened. So that gives you a hammer. Okay, but where did you see the hammer? You saw the hammer after a bullish trend. So you cannot use that hammer as a sell, sorry, as a buy, a reversal for a buy or continuation. No, you have to view that hammer as indicating or telling you that price could drop. I hope you're getting what I'm saying. So the hammer itself is for reversals. Okay. So when you see it after a sell, then it's likely to tell you be expecting a buy. And when you see it after a buy, then it will be likely telling you be expecting a sell. But how to trade them is another thing. Where to take your entry after a hammer closes is another thing that we need to look at specifically on the chart. So that's why backtesting is good. You you have to look at the chart, take a pair, look at the chart, let's say 4 hour time frame or daily time frame or 1 hour. And what you are doing is you are looking for hammers. So get a picture of hammer and then on your phone you are watching it. Then you are on your laptop, you are on Google, you are on a chart. Then you are only looking for hammers. Okay, so you'll be looking for, let's say you go to gold, you're only looking for hammer. So all the hammers that you see on gold, after the hammer closed, what happened? That's the question you ask yourself. Okay. And you put yourself, so if I were to be selling or buying after this hammer closed, where would be my entry? And if I'm to take an entry at this level of price after the hammer closed, did price drop back or push up to put me in a huge loss before playing out? So all those backtesting and looking at the chart will help you to know that, okay, you come to a point where you understand that, okay, after every hammer closes, if there is indeed going to be a reversal, there is a point where price will not go up again or will not go down again after a hammer closes. And you keep refining that, and then that can be a model that you might use to trade that hammer. I hope you're getting the insight. So this not to give you anything specific about how to trade hammer, but to give you an idea as to how you can start getting close to you yourself doing your own research or back testing to see how hammer behaves or what hammer does in price. Any other question? Any other question? Are you okay? Precious, are you okay? Okay. Precious, are you okay?
Yes, sir.
Okay,
Maybe
that's
when
all.
we go to the we can take it.
Okay, good. So we'll get to the chart very soon. So then we get to chart patterns. So the most important chart patterns that I have been seeing, there are a lot, but the ones that I've been seeing that always I think they play out very well are the flag, either the bullish or bearish flag. It's really powerful. The head and the shoulder, okay, is very easy to identify, head and shoulder. And the flag too is easy to identify and it plays out very well. The double top, double bottom, there is also triple top, triple bottom, but double top, double bottom, they are very, very, very powerful and they play out very well, especially if you know how to trade them. Then ascending and descending triangle, you mostly see this pattern when my price is trying to do a pullback and it will be in a space or a range of consolidation, but it will just be either descending like in a triangle form or ascending. So when you see that, you should know that market is about to have a breakout. Okay, market will be having a breakout. So then the falling and rising wedge. All of these are for pullbacks. Okay, mostly you see them if you are looking for a continuation. The rising or falling wedge will give you the pullback to sometimes sweep liquidity or probably hit a certain support level or something like that or resistance level and give you an opportunity to go for the continuation of the original trend. And so in the market itself, the ones that I like is the head and shoulder and then the flag. That's the ones that I've colored yellow. I like them. I don't know the ones you like, but in this market, so this is what I think. I don't like trading continuation so much. I feel like anytime I'm trading continuation, mostly I end up either losing. So I don't know how to trade them, or I end up shrinking my profit. I'll be in good profit, but market to pull back or reverse or something like that. And that's because I feel like the market has already been playing out and you are waiting for a pullback so that you join the trend. Okay. So mostly if you should be someone who is more in tune with continuation trading. I like reversals because I feel like for reversals, the market is now going to create a pattern or a system or a strong resistance or support where the market will finally reverse. That will be the end of a particular trend. The market will reverse. So if you are able to catch the trade or an entry from there and the trade decides to play out, you are going to be in the trade for a long time. You could get the first reversal wave or move. You could catch that move and close your trade even before the trade it comes for a pullback. Okay, so I like that one more than when the market is playing out already and I have to wait for a pullback to take the continuation. So that's me. So in this spirit, for when I'm looking for reversals in the market itself, double top and double bottoms are for reversals, and then head and shoulder are for reversals. Okay, so that those are the um so I like head and shoulder very well for reversals and flag pattern for continuation. But head and shoulder and the double top, double bottom, they are the most important chart patterns that you would want to be looking for if you are a reversal trader. So if the market is going to reverse, it will give a double bottom or a double top, or it will make a head and a shoulder. I want to say it again. If any market is going to reverse, most times it will show a head and a shoulder, a double top, or a double bottom. You can backtest this on every chart. Okay? You can backtest this. So when you see any market giving you a vein reversal move, you should know that no matter how it goes up or goes down, a time will come that it will come and make the other bottom or other leg or something like that. Okay. I've been seeing that a lot. That's why I've come to that conclusion. Um, yeah, so these are the most important chart patterns, and that's the end of the slides that I have. And this is the point where we can go to the chart and then we can place um the ideas side by side on the chart, and then we can look for all that we've been discussing or talking about in a real chart. So let's go to what is this? Where is Tolu? Are you here?
Yes, my boss.
But you didn't trade 51s.
No, I've lost my money for today. I don't want to enter again, but it's still going down, Sha.
The thing hit. Where is the analysis we did now? See, you see the preciseness in the analysis. See, you see the blue line. Are you seeing the chart, guys?
That's what I sent to group too now.
Yes. Can you see the chart, guys?
There is confirmation in if you go to 5 minutes. I wanted to explain something to this
Yes.
sister.
Yes. I sent this chart to when I saw Tolu's analysis, I said, yeah, Tolu is right. So when I analyzed, I intentionally so let me take a quick time to explain.
Hey, can I explain something to that sister that was just asking you a question that time? I forgot her name.
Precious,
Uchena or what? Is it
precious,
Uchena?
okay. Yeah, go ahead.
She's not online. Maybe she's not here. Don't worry, continue there.
Okay. So number one, what I saw in this setup here is that around this area is that even if it doesn't play out, one 15-minute candle, full candle and govern like this is a lot. It's a lot to make your day.
No, if
Okay.
you start very well, even
If
one
it
15 minutes can't do buy this
yes,
combo. If you
one
start,
15-minute candle that hits the entry precise like that and then drops like that is going to make your day. Okay. So what I saw was that if you look at the left side,
go to
always you
go
have
to
to look at your left side.
well.
Okay, if you look at your left side of the chart, um, this area I mean, in this class, we've been learning support and resistance. So you could see that
Mm.
this area here, let me pick my
Go to
yes.
10 minutes.
Yeah, but see this area where the blue line is. So you could see that around this area